Hey, what's up? It's Ben here. So today I'm going to be showing you how to do a vertical credit spread, specifically a bull put spread. Now, first things first, you need to have an option account to do something like this, and your account has to be at a level 3. I have videos explaining how to do that or get that. If you're interested, feel free to check them out. Video links are down below. And if you haven't signed up with Webull yet, feel free to do so, since they are still giving out 2 free stocks that could be valued up to $2,300, and it's just basically free money. Now, the reason why someone wants to do this kind of trade is because first, you think the price of the stock is going to go up. Second, you get to minimize your risk. And third, you don't need a lot of money to do something like this. Just like something like a cash secure put, you need to have collateral. But now in this case, you kind of don't. You just put a cap on how much you're making and how much you're going to lose. Now, with that being said, let's jump into it and see how you could do a vertical credit spread, or in this case, the bull put spread. So find an option that you want, find a stock that you want to trade option in. Now, for this sake, I'm going to do Palantir. Notice the market is really down today, so I'm going to hit Palantir, and then I'm going to go to the options. Now I'm gonna do a 3-day expiration. Now you can minimize this. On the right side, it's collapsible, so you could collapse that. And then there's 3 days, 10 days, and 17 days. So I'm gonna just choose a 3-day option expiration. I'm gonna scroll down a little bit right now. So currently it's under single option. What I want to do is click on vertical, click on that, and click vertical. And then since it has to be today I'm going to do a bull put spread, so it has to be a put. So if it's not a put, just go ahead and click on it and change it to puts. And then for the auto, this is where you could change the width of it. So right now currently I have set to 1. You could do a 2, 3. Now this is just notice that you're working with, if you choose 1, you're working with $100, 2 is $200, 3 is $300. So I'm going to just set it as 1. So right now, if I am doing if I'm thinking that the stock price of Palantir is going to go up, currently it's trading at $25.66. I'm going to buy something that's lower than that stock price. So currently right now is at $25.66. So I'm going to do something at $25.24. Basically, I'm going to be selling a 25 strike and then buying a 24 strike. So I'm going to click on something 24, 25, click on that. And make sure there's volume into it too, because you don't want to be trading where there's only like a dozen transaction going on. So slide to your right and see the volume. It's in the thousands. You notice that for this, it's in 3,000, almost about 4,000, and open interest volume is almost about 3,000. Notice that's volume, so you could get in and out the trade really quick. So I'm going to just go ahead and click on the strike at 24.25. And then now it brings up to this chart right over here. So notice that it's a long put vertical. I'm going to have to do a sell. So if I'm thinking that the price is going to go up, so sell. So now I'm going to get a credit. So this is the max profit is now $22 and the max loss is $78. Now you might be thinking, wow, max loss is $78 and my max profit is $22. But if you're thinking the price is going to go up, you're already getting the money to begin with. If the price is going to go up, you're going to get that money. If the price is going to go drop all the way to $24 on Palantir, which I'm not sure if it's going to drop all the way down to $24 within 3 days or so, because my expiration is at 3 days. I'm okay with this, because that's a huge drop if it's going to drop down to all the way to $24. So I am okay. I'm fine with this. Now, I'm not saying that you should do a trade like this. This is by all means, you could do any trade that you like. Don't follow what I do. This is just an example. So I'm going to do a sell. Notice that my vertical is 1. You could change that if you, my width is 1. You could change it to 2, 3. So 1, basically I'm working with around $100. So 22 plus the 78 is equal to $100 I'm working with. So go ahead and hit next if everything checks out right for you. And then now I'm on this screen. So in this screen right over here, you're going to be doing, you're going to double check your order. So right now the buyers are buying at 21 cents, which is $21, and the sellers are selling at 23 cents or $23. So if I want this to execute, I'll just, you know, hit it lower at 21 right over here. So limit price, I'm going to set it at 21. And then contract just by one, time date invoice just one. And then notice on the bottom it says credit $21. So I'll be receiving the $21 in advance. So if that means that if the stock price doesn't dip below 25, I'll be making that money, or I'll be keeping that $21 within 3 days. If it goes higher than that, I'm just only gonna make $21. But if it goes way down low, all the way to $23, I'll be starting to lose my full in this case, $79 in total. I'll be losing. So I'm gonna hit sell, and then verify everything is correct. So right now I'm gonna be buying a strike price at 24, and then selling one at 25. And difference right now was just a $21 credit for me. So you just hit confirm. And I noticed that the buyers are buying at 19, so it just kind of went down a little. So I'm gonna hit modify order, because right now the buyers are buying at 19, so modify order. So I'm gonna just do at 19 just so it execute. I know I'm probably not gonna make money on this one, and then hit confirm again, and then it's filled. So going back on my order, let's go back. So now going back to my account, notice that Palantir right here, it shows up vertical. So I have one that's that I'm buying at 24 strike and then selling at 25. So now right now I'm losing money because I actually went lower than I was gonna pay. I just want this to execute. Now, if you want to close out a position, this is how you're gonna do it. So click on Palantir vertical right there, click on that. So it's buy to close, because you were selling earlier. Now you're gonna be buying to just close it. So go ahead and buy to close out this position. And notice how I paid for, it was like $19 for this. Now I'm gonna be click on here and just buy at 20. Let's see, what is the seller asking? Buy at 22. So let's see, 22. So it should execute almost immediately. Now I'm gonna hit confirm. Everything looks right. Now debit is gonna be 22, so I'm paying 22. So, and it hit confirm. So it's been filled. So notice how I sold it at $19, and then now I bought it for $22. Basically, I lost money. I lost $3 on this trade just doing this transaction. So hope you understand this a little bit better. So doing a vertical credit spread, or in this case the bull put spread. So if you have any questions, feel free to let me know. I know I just kind of ran through this example really quick because I had a video doing a vertical debit spread. So if you're interested in that, feel free to check that out below. So if you have any questions, do let me know again, and I'll see you on the next video. Goodbye.